Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top small caps in play today. So first up, we're looking at SurveyMonkey. All right, this was the IPO out today. It says it soars in public market debut, 44% jump above the initial price of $12. So that sounds great, right? Closed at $17.24. Well, let's look at the chart. So yeah, it closed down here at 17. We've got it 1724 here. It's down at the bottom of the trading range today. So yeah, it opened up here at 1874 and it ran all the way up to $20, but they drove it all the way down to the low. So it didn't look like that successful of an IPO to me, the way they drove it down all through the trading day. So how do you play this? So you got to wait to see where the bottom's going to be in here and how far they're going to pull it back. All you have to go by as far as technically is the intraday charts. So it needs to break above EMAs 4, 8, and 13 here. Once it gets above that green line, that's EMA 8 at 1780 and turns that level into support, that's when it could start pushing higher. Okay, take a look at ANY. Okay, so yeah, this is Sphere 3D Corp. It closed up 51% today. So yeah, that was an incredible move, right? So you have a 51% gain. You have a huge volume bar today, and so that sounds all wonderful. But then you look down here at accumulation distribution and shaken money flow, and you see a giant spike down on both indicators. And so that was a big red flag here. That signals dilution. And how does that happen? Well, you can see the black candle form today. That the open was up here at the top of the candle, and they ran it up to 72.50, and they drove it all the way down to 42. Now it did break that 100-day simple moving average intraday, but it closed back above. So that's keeping it in play as long as it can stay above 39. But if it drops below 39, that's going to signal downside risk. You could see the gap fill between these two candles. You could see that 50-day simple moving average at 31 tested. A drop down to 29 would fill the gap. It's just going to be real important now that it stays above 39 in order to head higher. Whenever that black candle forms after a gap up open, the safest thing to do is to head to the sidelines. Okay, yeah, so check it out. Here we go again. This is accumulation distribution and shaken money flow. And I like to show these just to show people that are trading penny stocks the dilution that can happen. You have big spike down on both indicators. Look how they were going sideways here, fell off a cliff. And so what happened? You have a giant green volume bar, right? So everything sounds good, but look at the long upper wick. It traded way up here at above 1650, and they drove it all the way down. And so this is for a ticker symbol ALDX. And so yeah, that ended up showing profit taking and dilution. This was an all-time high up here at 1650. This is on a blue sky breakout, and so yeah, it was breaking out to these new levels, and yeah, people locked in gains. Now it's floating up here in space above the upper Bollinger Band, which is down here at currently at 1104, and then you have EMA 4 at 1095. Those are the first support levels below if it works its way down. If it dropped down to $10, it would fill the gap between these two levels. And so yeah, that is the downside risk, is that the candles work back into the bands. Everything was going great today until the chart started breaking down. It was this candle right here that was your big red flag that formed at 2 o'clock. It closed below EMA 4. That level had been holding all day. There was one close below that, but notice how that was support. When it broke, that was your signal, okay, it's starting to consolidate. It turned into resistance, and then it really got cooking. The thing is, it's much easier to sell into strength than it is into weakness, and so people were really pushing hard, on the sell button into the close. So where's it headed? Look for a technical bounce off the 50 simple moving average at 1238. That's the big support level to hold. Just below that is the top of the gap, which is right here at $12. And so you could get a drop to the bottom of the gap, which would be down here just below 1075. And so that's the downside risk, is a drop down to that 100 simple moving average at 1088 to fill the gap. Okay, let's look at CDTI. Closed up 47% today. Had a really nice close above resistance. Yesterday it closed above the middle Bollinger Band for the second day in a row. That's at 183. As long as that level holds, that's this dotted purple purple line, a new uptrend could begin. Today there was a bullish close above the green line and the gold line. That's the 50 and 100-day simple moving averages. So now that it's above the gold line, it needs to stay above that level at 265. If it were to drop below, it could consolidate, take a little while to get pushing higher. It closed at high day. There's no upper wick. The bulls were in control into the close. And so if it did pull back below 265, what you really want to see is this 50-day simple moving average hold at 213. Notice how that's been the tough level to break. Having that turn into support would signal the potential push higher. Maybe this could work its way up to that 200-day simple moving average at 441. So keep an eye on that stock. And then check out XOMA here, ticker symbol XOMA. The RSI is now in the bull zone there. Look at the crossover here on ALDX. It's always good if you're a bull when the green line crosses the red line to the upside. It's a signal the bulls are starting to take control. You've got a volume spike down here. And so you've got the nice volume, the best volume since back here in August, the best green volume bar since back in June, and it closed above the middle Bollinger Band, currently at 1716. That's the dotted purple line. Notice how all these candles were having a difficult time staying above that level. That as long as that level holds, a new uptrend could begin. Now it hit the big level to break. That's the green line. It's the 50-day simple moving average at 1945. If it can close above that level, it could push higher, and then you'd be looking for a run up there to that 100-day simple moving average at 21. Now, if it fails to get above that 1945, it'd be best if this 400-day simple moving average held at 1842. If that were to break, you could see that middle Bollinger Band retested at 1716. Okay, take a look at VLRX. Once again, you've got RSI now in the bull zone. So the chart is heating up. Look at the pinched here on plus DI. Bulls want to see that green line cross over that red line, negative DI to the upside. And so today there was a bullish close above the green line, the 50-day simple moving average. As you can see here, this has been the tough level to hold. When it breaks, it signals downside risk. So right now it needs to stay above that level to remain in play. If it were to drop below 129, the downside risk is it could come down there and test that middle Bollinger Band at 108. To the upside, if you see it break above that 100-day simple moving average at 142, that should be the signal that it wants to push higher. It would need to stay above that level once that level broke. Oh yeah, OASM here. Yeah, I wanted to show you this one. It had the black candle today after a gap up open. That's very, very close to a hammer. I mean, let's take a look here. It was up 15% today. OASM, very nice run. Congrats everybody. You do have RSI now at 83, so it's at very overbought levels on RSI. Starting to get that rounded look to it. You've got Fasto up here, 89. So it is frothy. It has the multiple white candles in a row, and then you've got the black candle. If it wasn't for this little tiny upper wick right here, this would be a hammer. And I mean, to me, this has the same type of signal as a hammer would. It has the exact same thing. The only thing that would be different is a chart purist might say that little upper wick makes it not a hammer. And if it was a hammer, then this would be a bearish hanging man reversal pattern. When you get a hammer after a gap up open during an uptrend, many times that signals the candles could work back. You could get a pullback, and in this case, since it's up above the upper Bollinger Band, that's another red flag. The candles could work back into the bands. So what you want to see is that EMA 4 at 442 hold on a pullback. The downside risk is if that were to break, you could see a drop to 375 to see this gap filled. There's a gap between Monday and Tuesday, and then there is another gap from last week all the way down here around 275. Okay, let's look at AKER here. Closed up 8% today. This chart is heating up. It has RSI at 56. Now that RSI is above 50, it needs to stay above 50. If it dropped below, that would signal that it's cooling down, not ready to go. In order to be bullish, it needs to stay above that level. Same thing with Fasto, now above 50. Yeah, you've got this, we were talking about plus DI crossing over minus DI, the green line crossing over the red line. Check out how we have the ALDX crossing over negative DI, minus DI here. And that's another signal that the bulls are heating up. Okay, so there was a bullish development for AKER today. It closed above the green line, the 50-day simple moving average at 28 for the second time in the month of September. And so maybe the second time here will be the charm. It needs to hold that level. If it were to drop below 28, that would signal more consolidation, not ready to go. It's really only a good play right now if it can get above that level. Notice how it had had the ascending support here, and so it's breaking out above resistance. And so this could be the time. If it broke below, then it would need to hold that middle Bollinger Band at 26. If 28 holds, 31's the next level to break. You want to see a break above the closing price on the 12th. And if that happened, then the 100-day simple moving average at 36 would be the target. Okay, yeah, so the chart is heating up, and so we'll see if it can push higher. Yeah, it's got the volume has been picking up as well. Okay, let's look at CLRB. Closed up 24% today. RSI is in the bull zone here. Yeah, so this is another stock. There were multiple small caps. Even with the Russell 2000 was under big pressure today. And yeah, it was the worst performing index there. It was down, I think, 1%. And yeah, it's in a very strong downtrend right now. This is a seasonally bad time for small caps. They usually outperform from now to the end of the year, but there are always diamonds in the rough, and that's what you want to focus on. You want to focus on the stocks in play with good charts that have good volume, and you just want to just keep rotating to the stocks that have the right chart patterns. And so for right now, CLRB has a nice pattern going on. You've got the volume spike. You've got the big volume spike. That's the best volume, best green volume bar in months. And there was a close today above that 50-day simple moving average. We always like that. That many times is a signal that the stock wants to head higher. Now it has to stay above that level. If it drops below, most of the time you've got the middle Bollinger Band right below, and that level needs to hold to keep an uptrend going. Once the middle Bollinger Band and the 50-day simple moving average turn into support on the daily chart, stocks can get a really good uptrend going. Just above is the next resistance level. There's a gap over here. The top of this candle is the bottom of the gap, and then the bottom of this candle is the top of the gap. And so what we'd be looking for is it needs to break above the top of the gap here around 375, or the bottom of the gap at 375. And if that happened, you could get a run up here to around 520, 525 to fill the gap. The gap fill. Keep in mind, a bottom of the gap is always tough to break. It's similar to a 200-day simple moving average. It's just a tough level. And so if it does break and turn into support, that's where you look for that gap fill. Okay, let's look at HTGM here. All right, so yeah, closed up 10% today. This is impressive. It had a breakout. Now you've got RSI closed above 70 at 71. It needs to stay above, similar to here. If it were to drop back below, it could consolidate. You have Fasto now above 80. Notice it pushed last time above 80 for an extended period of time when it had this nice run going. So yeah, it is on a 3-day run already, and it did have a giant volume spike today, so this could be a little climax spike. It did also close above the upper Bollinger Band. When you get closes above, like right here, right here, right here, candles right over here. I mean, there's multiple examples here where candles work back into the bands. And so if you miss this one, don't worry. You might be able to catch this on a dip. If it came down here and tested EMA 4 at 473, and then it stayed above high close resistance here, that should be the signal that wants to head higher. It needs to stay above this closing price here on the 7th of September. If it can stay above that level and turn it into support, that should be the clear signal that wants to keep pushing higher. As long as EMA 4 is holding, the chart's super strong. It's just when stocks push above that upper Bollinger Band, many times they work back into the bands. This is a good example right here. And also, you always have to look out when you're on a multi-day run for a volume spike. And so many times the spike is what we call a climax spike, where people lock in gains. Now this can keep pushing higher. This can totally keep pushing higher. If you look at this weekly chart here, volume is still very low. You've got a very small volume bar this week. Volume has been low for a while. There was a volume bar back here on the end of August, and so notice this volume spike. It was the largest volume since way back here in March, and then the break above resistance above the middle Bollinger Band, that started the uptrend. And also notice that volume spike and break above the middle Bollinger Band on the weekly chart also correlated with the break above descending resistance in the symmetrical triangle pattern. And so this break above resistance signaled the start of a new uptrend. This spike right here is what we call an intention spike. This spike was telling you, okay, yeah, this is in play for a longer term swing trade. So as long as this middle Bollinger Band at 369 is holding, the bulls are in control, and you can ride this longer term. Now that said, it is hitting the big resistance level. Notice February and March here, this 510 zone has been huge resistance. If it can close above this level for the week, that should be the clear sign that it's finally ready to push higher. And then you're looking at this cluster of candles over here and a run up here between 6 and 7. And so it's just all about right now getting above 510, turning that into support, and that's what the longer term bulls are wanting to see. Okay, let's look at Icon here. Okay, this is very interesting. Okay, this is Iconix brand, ticker symbol ICON, and yeah, this is a notorious ticker symbol. And the interesting thing is there's been multiple filings out this week with the CEO has been selling shares. He dumped it at like 26 and I think maybe 29 or 30. I know the 26 is correct, but so he's been selling shares, and then now the share price is heading higher. And so maybe he just had some bills to pay, not sure. But usually it's not a good sign when the CEO is dumping, but this is heading higher, and so you've got to follow the chart. It's up 26% today. It's coming off of the bottom. It closed above the middle Bollinger Band at 29. Now, the last time it closed above that level was back here on the 7th, and that level failed to hold, and look what happens. So do not hold this stock long if it closes below the middle Bollinger Band. It's just deadly. Why? Because dilution. Like these small caps, if you're going to be a penny stock trader, you have to know that many of them sell shares to pay the bills. And so when they have a nasty downtrend like this, it usually means that they have major problems with financing, with dilution. And so you only want to be trading long, if you're not playing the short cover rally, when it's above that middle Bollinger Band. It has to stay above that level. I just want to throw that out there. If it stays above 29, it could push higher. It's at 32 in after hours trading, so it could open at 32 and there wouldn't be a gap because of this upper wick. And so the whole point is if it stays above 29, it could possibly run up to this 38 to 41 level and test that 50-day simple moving average in the upper Bollinger Band. There was a huge volume spike today for this ticker symbol. I mean, it wasn't huge, but it was much bigger than the previous one. I mean, it was the previous day was 1 million, and it had traded nearly 4.5 million. So the big volume spike, close above resistance, trading higher after hours. They're pushing it right now. Okay, so let's look at OGEN. Just be careful. Okay, OGEN here closed up 20%, and so yeah, this one here had the black candle. This is why we say don't hold when that black candle forms, especially when it's the gap up open during an uptrend above the upper Bollinger Band. That's usually 9 times out of 10 you're going to be very happy that you sold. So if you follow that rule over the course of a year and you sell or exit every time you get this pattern set up with the gap up open above the upper Bollinger Band during an uptrend, you're gonna profit. And especially if you do it over the course of years, that's going to save you and make you a lot of money. Just throwing that out there because a lot of people hold on this type of candle, and then look what happened. The gap down open. So if you knew the pattern is to lock in gains when you see the black candle form after the gap up open. This forms when the stock is up on the day, but it's trading above the open. And the red flag is that it's in an uptrend on a multi-day run here, and it's up above the upper Bollinger Band. Many times candles will work back into the bands. So yesterday bulls got really punished. That held overnight, and today it's pushing back higher. Okay, so the weak hands folded yesterday, and then today it's still in an uptrend. As long as the middle Bollinger Band down here and the 50-day simple moving average and the 50 support zone hold, this uptrend's intact. Okay, if it dropped below, then that would signal more consolidation. As long as it's holding, it does have upside potential. Now it's hitting the big level right here. There's a gap, so it has to break the bottom of the gap right about 85, and then the other level is the 100-day simple moving average at 93. Notice that this gap did not fill. There's still a micro amount to fill up here, right around 119. And so yeah, this still has some work to do. If it fails to get above the bottom of the gap, that'll signal more consolidation. Staying above EMA4 at 69, that's a good clue that the chart is still strong if it can hold that level. Okay, let's look at INPX. Closed up 24% today. So yeah, keep an eye on this one. It's trying to hold on to that 100-day simple moving average. It did close above that level today. That was a bullish close. It is above the upper Bollinger Band right now. It needs to stay above that level. It needs to hold 22. Stay above 22. As long as it stays above 19.5 and EMA4, the chart's still strong. It's just once a key moving average, like the 100-day simple moving average break, breaks, it's best that the share price stays above. Otherwise, it could consolidate. Also, notice the high close right here on the 12th. That's another key level at 21. If it can stay above these two levels, it could push higher. 29 is going to be a next big level to break. And then you have some candles up here, you know, around 35 or so. That's going to be a resistance zone. It's going to be 29. You know, keep an eye on that level for the for if it does push higher. And then let's look at RSLS, closed up nearly 23% today. So yeah, this stock, for this to get moving, what it needs to do is get above the middle Bollinger Band at 5 cents. If it can turn that level into support, it can get an uptrend going. It's been working on that level, but it's been failing to get above. And so if that level can finally turn into support, that'll be your clue it's ready to go. It's going to be a risk to hold when it's trading below. Today it did close above EMA's 4 and 8, so that's a clue that it's heating up. Those levels had been resistance, those had been below, and so it needs to stay above 4. If it were to close at 4 or below, that's going to signal consolidation. It needs to stay above that level. So it's hold 4, break 5. A close above 5, you know, and you also have EMA 13 here, you know, that would be extremely bullish. Notice how it broke those levels intraday, but they were able to pull it back. Just, you know, just keep in mind when you have a very strong downtrend like this, it's all about loading on the day that it closes above resistance. And so just to throw that out, you know, just to throw this out here, if you're looking for this type of setup, many times it's best to wait until the end of the trading day and right before the close to see if it is going to close above resistance. Because if it pulled back end of day, you know, you could have been like, okay, it's not ready to go today. Tomorrow may be the day that it's ready to go. On this type of setup, you want to be loading on the day that it closes above resistance. That's the day to enter. Okay, if you load too early in the trading day, they could pull it back. Just throwing that out there, just trying to help. All right, thanks for viewing this video. Come check out the chat. Thanks.